Hey, Rob B here with Rob D, and you are listening to the Property Podcast, and it's our market update. For those who've been listening every week, you know how this begins. We start with our feelings. And Rob, another week in sort of lockdown, because things are changing. How are you feeling?
I'm feeling really good, and I've been feeling really good every time you've asked me that question for the last few weeks. And it helps that we record this early in the morning when I tend to be at my best, and it helps that it seems to be sunny all the time at the moment as well. But the reason we started asking each other that question when we started doing these market updates was we kind of felt like we needed to check in on each other's feelings because it was a scary time and everything felt very different and we were all trying to adapt. But now we're however many weeks later, not that many weeks, but normality does seem to be returning now.
It does. It is a new normal, but at least for myself, I'm finding it easier to deal with, a lot easier to deal with. Just having some small freedoms, being able to get out of the house and not feel guilty about it is good. You know, it's nice to be able to move around again. And the small things seem like big things now, but in a good way. Going to a garden centre or a supermarket feels like an adventure rather than a chore. It's something different. I think that's quite nice. I hope this feeling lasts of appreciation for the small things. I really do. I hope it's something that I can lock onto and carry with me for as long as possible. Because for all the negativity and some of the dire consequences of this virus, there has been some positivity. And I think people have come closer together as one of them. That's an obvious one. And I think another one is that people are finding appreciation for the small things again. Finding out what's important to them in their own lives, deciding on who they like spending time with. I think all these things are playing out across the country. I don't think it's unique to you and I. I think this is a universal thing. That's not just, I say the country actually, but universal. All over the world, people are probably going through this very thing.
Yeah, I think just about everyone I've spoken to now has reached a point where they've adjusted and they've, like you said, figured out what's important and learned that many of the things that they were doing before, whether that's in terms of costs that they were incurring or activities that they were regularly doing, they maybe didn't matter that much. And they have found that they're just as happy focusing on different things that are more meaningful to them. I don't think that will last forever. I don't think the world has fundamentally changed. Everything always creeps back in. It's like in business or in your own finances where you'll go through and you'll cut out a load of costs and you're, oh, brilliant, we didn't need all that spending. But it always creeps back in over time. It's just the way things work. But like you say, I think there is a really positive thing and we should try to hold on to it for as long as we can.
I think an analogy possibly we could use is that the gym, loads of people sign up in January and loads of people fall away. Majority of people fall away. But there will be some who carry on and form those new habits. And hopefully there'll be a small proportion of people who do keep these habits and do carry it on into their lives. And that's good because that means even if a small proportion of the population has changed for the better, then great.
Definitely. As we've talked about in recent weeks, the property market is open again. It's not open in the same way as it was. In-person viewings are still only happening after a video viewing, or they should be. That's the guidance anyway. And in-person viewings have to be done in a certain way and meet lots of safety procedures. But it is more normal than it was. As a result of that, we're seeing an uptick in demand, and we're also now starting to see more stock coming back onto the market. I noticed this week that in the areas that I've got Rightmove alerts set up for, I'm getting far more of them this week. I'm seeing far more stock come onto the market than I have done in a long time. The interesting thing though, Rob, is that the prices of that stock that's coming on hasn't changed from where it was pre-lockdown. There's a lot of talk about what's going to happen to property prices, and we've talked about it on many episodes in the past. What I'm saying now isn't making any claims about what's going to happen to prices in the future, but I think it's interesting right now to see that people who are putting their property on the market now clearly want to sell it. They are aware of everything that's going on in the world, so this isn't stock that's been on for a long time. They're making the choice to list it now, and the price they're listing it at isn't any lower than it would have been back in March.
Before we turn the mics on, you made a really good point, and you said that property prices are sticky on the way down. And for those who listen, what that means is that prices don't always just fall off a cliff in property. And the reason for that is sellers, unless they're forced to, unless the market dramatically turns, don't suddenly all go, you know what, let's wipe 5-10% off. I feel my property's worth less now. Because they'll just hold on to it. If last week or 2 months ago they felt their property was worth X, they're going to be very reluctant to do X minus 5, 10, 15% unless they have to. And that comes to what would force property prices down. If it hasn't happened yet. Could it happen? Well, yes, it could happen. And it's really going to be two main drivers. One is credit disappears, so mortgages, mortgage availability, the loans are values available on mortgages. That doesn't seem to be happening. Mortgages are coming back at a rapid rate, and credit seems freely available. And that's a lot to do with the stimulus packages and measures we've talked about over the last few weeks. And the other thing is mass unemployment. If unemployment really hits hard, then property prices could fall. That hasn't happened yet, but that could happen. And that's where we have to wait, Rob. We can't now be bold and say property prices will not fall, because we need to see what happens there. So that will be the trigger for whether property prices fall. And if it doesn't happen, then property prices probably won't fall this year, or not by any meaningful amount.
No, I think you could still easily see a dip, whatever happens with unemployment, because at the moment there are going to be fewer buyers than there were, obviously, because of people being cautious. And there will always be some people, a small number of people, who have to sell. And that number won't be large as long as nothing happens with one of those big drivers like unemployment or lending. But if you've got a lower volume of transactions, a larger proportion of those, therefore, are going to be people who do need to sell and will take a hit on the price. Therefore, you end up with property prices falling slightly on low volume. I think that's likely to happen, but that's different from this bigger drop that we've talked about, which does need to be driven by those factors that we just talked about. I think most people, if they're thinking about selling a family home or maybe even selling an investment property that they've owned for a while because they'd like to free up some cash, they're thinking about doing that in March. They're still thinking about doing it now. But if they can't get the price they want, they'll just decide to hold on to it because that's okay. But then there are some cases where people will need to sell. So yesterday, a listing came on in one of the areas that I'm looking at, which was a really great refurb. Somebody's clearly gone in and done a really amazing job of it. And you can see by looking at past sales prices that the previous transaction isn't on the land registry, which tells me that they've owned the property for probably less than 6 months or so. So I feel really sorry for them because they've gone and done this great refurb expecting to make a profit. They might now be in a situation where they're on bridging finance, for example, and that finance is racking up. So they might need to sell, and you might then be able to go in and get that property at a discount from where you would a few months ago. Bad luck for them, good news for the buyer. But just because you can do that doesn't mean that every property is going to be available at that kind of discount. And we're already seeing the very first signs of this now, but it's going to be interesting over the next couple of months to keep monitoring this and see if we can pick up on the early signs of where things are going.
Over the last few weeks, we've talked about all different government support measures, and one of them being the bounceback loans. And we've touched on property investors have been debating amongst themselves whether bounceback loans are available to them if they have a company. And there are people out there who quite strongly believe it is available to them. And they're putting it to creative uses, Rob.
Yeah, there's been this debate about whether property investors can take bounce-back loans. I've not been following it closely. There's a debate about whether it counts as a trading business or not if you're an investor. But the point is, these are really easy to apply for. You just have to fill in an online form and then the money lands. No one actually checks. So if you believe you're eligible and you're willing to take the risk that you're not and someone looks into it later, then that's okay. You could go and do that. But the point of these loans is it's meant to be for businesses that are struggling. That's the entire point. The reason that it's easy to apply for is it's meant to be for businesses that are having a really hard time and they just need a quick bit of a cash injection. They don't have time to wait around and do all the paperwork for the bigger loans that are available. But if you keep an eye on forums and on social media, there are a lot of investors who appear not to be struggling or not thinking I must take this loan so my business survives. They're thinking I must take this loan so I can go and invest in another property. Or even thinking, which you can't actually do, but people seem to be wondering if you can do it, I'll set up a company and then take the loan and then shut the company down again. It's just madness. And we've talked a lot about the positive aspects of this in terms of people coming together and everything else, but this is my kind of negative take on it. It is only a minority. It's just a fairly vocal minority that you see. It just seems so wrong. These are funds that are there that are underwritten by the taxpayer, that are there for businesses in need, and you're just trying to figure out how you can get as much of that as you can for yourself by any means necessary so you can make yourself richer with it. It just seems totally wrong to me.
Yeah, and if that's not bad enough, there's some people who sell these property courses, where you go in, you spend a few quid, then you spend some more, then you spend some more, and before you know it, you spend tens of thousands and you've got a property. Well, some in that field who are advocating not only that you take one and use it, but use it for their courses. I wonder why they're promoting you to take it. It's just unbelievable. Unbelievable. These people have no shame. Go ahead, take this money from the government and invest it in me. Sorry, you, because you're investing in yourself. Oh dear. Probably best to leave it there, though, before I go on a rant and start using swear words, because that's going to mean more work for our editor this morning.
A final thing that I've been thinking about this week that I think might be interesting to talk about briefly is what happens in terms of taxes as we start to come out of this, because we just talked about bounce back loans. That's just one small part of all the interventions that are being made to keep the economy going. There's all the loans to businesses, there's all the new money that's basically being printed, there's absolutely loads. I think I saw a stat like last month the government borrowed as much as they borrowed in the whole of last year. So there's a massive amount of borrowing, and so you logically think, wow, taxes are going to have to go through the roof to pay for this. And I've seen lots of articles and comments over the last week talking about how these really big tax rises are going to be on the way. And I'm going to go out on a limb here and be prepared to be really wrong publicly about this. But I don't think we're actually going to see those large-scale tax rises over the next couple of years. That sounds a bit mad because there's all this spending going on, and of course it needs to be recouped somehow. But for me, there's a couple of things. For a start, to get the economy going again, what you don't want to be doing is taxing people a lot, because you want them to feel wealthy and indeed have more money that they can then put back into the economy to create jobs, to get spending going and everything else. Increasing taxes on individuals or businesses would be counterproductive to that. But also, the scale of the spending that's gone on over the last few months and will continue to go on through the rest of this year and probably even beyond is so enormous. You can never recoup that with taxes. It's impossible. You can put income tax up as high as you like, it's not going to touch it. And as the Laffer curve tells us, there's a certain point beyond which you can't increase them anyway because your receipts actually fall.
Love it. Rob, this is why we're friends and business partners, because we think the same, which is probably boring to listen to sometimes, but at least we are consistent and aligned in our contrarian views. For me, if you believe that this is going to be paid by taxes, you do understand finance, but you don't understand economics. Because for the points you've laid out, Rob, it can't be done. There may be some symbolic tax rises. So the government's showing, oh, look, we've put up income tax by a tiny bit, or we've moved this a nudge. But it'll be symbolic. It won't make a difference. It can't make a difference. So the only way you're going to get out of this is to inflate your way out the debt, which we've talked about on previous occasions, because with inflation, the value of your debt will decrease in real terms. Or you take on a whole new way of treating money, or MMT, which stands for Modern Monetary Theory, which is quite complex as a subject, but it basically means you don't pay your debt off. You use your own money to pay off your debt. So you create money and pay it off. You can do it that way. And there are lots of interesting theories on how that can be done. I'm not saying that will happen. But that's, for me, more likely than huge tax increases that will eventually pay off the debt. And if the government do take that approach, and they believe that huge taxes are the way to see us out of this, then we need a new government, because they don't understand economics. Now, this isn't a bash at people who look at finance numbers and go, well, wait there, we got a debt, we need to pay it off, so we need to increase taxes. I understand why, logically, your brain would think that way, but you have to understand the scale of what's happened here. And you have to understand also that taxes can only be raised to a certain amount before you actually earn less. And that, as you've explained, Rob, is because of the Laffer curve. Again, a little bit of a YouTubing, rather than us going into explaining what all these things are right now, we'll explain it probably in under a minute. But the main point is, Rob, I completely agree. I can't see it happening. Maybe some symbolic raises of taxes to show that, oh, look, we're acting responsible, but nothing meaningful, no widespread tax increases for everyone. Could be way wrong. We are on record. But I don't mind being on record, because I think actually it's good to share a different opinion and a viewpoint and go against what most people are saying. And that's why I've enjoyed these weekly chats that we've had.
Yeah, I've really enjoyed them as well. We've had enough kind comments from people to know that at least some other people are enjoying it as well. But all good things must come to an end. And next week is actually going to be our final regular market update. When we started doing these market updates every week, we could have done them every day. So much was happening. And now, as we've talked about, normality is starting to return. The urgency to get all the new information out every Friday isn't there anymore. So next week is going to be our final regular market update. We're going to use that to wrap up some of the big themes that we've talked about and some of the things that have changed since we started doing these about 10 weeks ago or so. But every so often, when there is something to share or when something significant has happened, we'll put out a one-off and we'll continue getting that information to you. And if there are any themes or ideas that we've talked about in these market updates that you'd like to hear more about in the regular property podcast on a Thursday, please let us know. We'd love to hear from you.
Yeah, it's been really pleasing that the conversations that Rob and I would normally have off mic have actually been appealing to a reasonable number of people on mic. So thank you for all the support. And don't worry, the podcast, the main podcast, the property podcast, is continuing. Nothing's stopping there. And so is Ask Rob and Rob. So you're still getting 2 shows every week. But next week you get another hat trick of shows. So we all have that to look forward to. So until then, everyone, enjoy the sunshine, take care, stay safe, have fun. Bye-bye.